Morning, everybody. Here's a walkthrough of preferred shares and 3 journal entries that we're going to have to know through activity 3. On top of some of the details, I'm going to leave the details, issues why you would use preferred shares, that sort of thing. That's going to be your study notes that you're going to worry about. We're just going to concentrate solely on the journal entries themselves. Now, look, on June the 1st, the RAND Corporation issued 25,000 shares for $5,000. Just like before, we debit the bank, we credit preferred shares. And when I say before, what I mean is just like when we did common shares. Okay, when we worked through the common share exercises, we credited common shares. This time, since they're preferred shares, we just changed the word common to preferred. It is honestly that simple. We take 125,000. Where do I get 125,000 from? I take my 25,000, I multiply it by 5, issued 25,000 shares at $5 each. Okay, and that's it. That's the journal entry. All right. Now on June the 1st, again, they issued 6,000 preferred shares. This time, though, they have a stated value of $7, but a sale price of $10. So we have to debit the bank. We're going to credit preferred shares. Again, let's move this down if I can. And then we're going to credit one other account like that we talked about in the previous video. When we have that excess value over stated value, it's that handful of a term contributed capital in surplus of stated value. I really wish there was a short form for that, but there isn't. So we just have to get used to writing all of that out. So what's going to happen is we sold 6,000 at $10 a piece. That's the actual sale price. Okay, be careful about that. But that is our sale price. So that's 60 grand. Okay, our preferred shares are going to go up by 6,000 times the stated value of $7 a share. So that's $42,000. And our contributed capital is just going to be the difference, $18,000. All right, and issued 6,000 preferred shares with stated value of $7 for $10 each. Okay, and that's it. All right. I think some of the greatest detail actually comes from, or the greatest amount of work is going to come from some of the account titles. For example, again, this contributed capital and surplus of stated value, that takes a lot of time to explain it. And in your description, yes, I do want this kind of detail. How many shares were sold? What was the stated value, if there was any, and how does that differ from the actual sale price? All right. That has to be listed within the description. Now, down below, last one here. Hopefully this isn't too awkwardly worded. Maybe I can just quickly move this over so we can see the whole question. There we go. All right. Perfect. The RAND Corporation has split its $5 stated value preferred stock into common stock at a ratio of 3 common stock for every 1 preferred stock. So here's what they did. For whatever reason, the RAND Corporation has decided to say, look, if you have 1 preferred stock, you can turn that into 3 common stock. Okay, you could split it if you feel like. All right. Now, in this case, 1,000 preferred shares have actually been split. All right. So what's going to happen in our entry? We're going to write down August 15th. We're going to debit preferred shares because those are going to be reduced because people are splitting them. They're turning them into common shares. They're not accounted for as preferred shares anymore. And we're going to credit common shares because we're increasing the number of common shares because of the split. So 1,000 of them have been split. Well, they're at a stated value of $5 each. So I take 5,000, a debit to preferred shares, and I turn that into 5,000 common shares, or $5,000 worth of common shares, at least on the books. All right. To record, and this description is going to be a little convoluted, but we have to get through this. To record the stock split of 3 common shares for every, oops, not 4 as in 4 golfing, but 4, every 1 preferred share. For 1,000 preferred shares at $5 each. Okay. Again, this description needs all that information. You need to tell me how many common shares were split for how many preferred shares. How many, what is the ratio, pardon me, how many preferred shares were actually split, and what was the stated value of those preferred shares. All that information has to be contained within the description. Okay, guys, that's it. I'm online if you need anything. Happy accounting.